If you're a business owner, day-to-day finances are probably not the top of mind for you because you're doing what you do best, running your business, being an entrepreneur. That's why CFO services are invaluable, because let us worry about the day-to-day financial minutia so you can focus on operating your business. When small business owners are considering options for accounting, there are a few out there. So for example, there's the large accounting firms. They typically have higher overhead, so handling the day-to-day accounting might not be affordable for them because of their high cost structure. And then there's the bookkeeper. They are cost effective, but usually they're not able to handle complex transactions. Luckily, there's a third option. Large accounting firms are notorious for surprise fee hikes. And they often cite things like, oh, the financials were in a worse state than originally anticipated. Or they tell you that the scope changed throughout the engagement. Does that sound familiar? This is why it is essential to ensure communication on the total scope of the project before you even get started. Because after all, you should have the final say on the scope as well as your final budget. Regardless of who you decide to hire, you want to make sure that you're getting the right services at the right price. This is why it is essential to ask 4 key questions when engaging any accounting services. The very first question you must ask is, do you anticipate any fees above and beyond what was originally quoted? And if so, what do those services include? If you're a large accounting firm, you're likely going and hiring the cream of the crop, the top 10 percentile of students from the best schools across the country. And that comes with a price tag. So who usually carries this cost? Usually it's you, the client. The second question you should ask your accounting firm is, do you provide management accounting services? You'll be surprised to hear how many times there was a misunderstanding between a business owner and an accounting firm when it came to services provided. Business owners are often shocked that the accountants are only responsible for producing year-end financial statements and tax filings. I believe sometimes that having an accounting firm in place gives business owners a false sense of security. I hear them say things like, my company ran out of cash and my accountant didn't even see it coming. If you do not have accounting expertise, then you should be asking your accountant for additional management accounting services. Some of those may include strategic planning, budgeting and forecasting, cash flow management, key performance indicators, and finance policies. The third question that you should be asking your accounting firm is, based on my business goals, do you feel this scope sets me up for success? After an initial consultation, any service provider worth their salt should have a basic understanding of the needs of your business. If you're in the process of raising capital, preparing for initial public offering, or even bringing on a board of directors, your needs may drastically change and you may require far more than just a basic accounting package. For example, if your company has multiple divisions and multiple products, investors may ask you to break out your margins and your profit and loss by each segment of the business. That is why just one set of consolidated financial statements may not be enough given where you are. The fourth and final question that I like people to ask their accounting firms is, will the same person be on my file through the entire cycle? Let's face it, accounting is a personal relationship. A situation comes to mind to illustrate this. When was the last time you called your telecommunications provider to make a complaint? Probably not that long ago. Did you tell your story, lodge your full complaint, only to be transferred to another individual and have to tell that story over and over again? Well, the same frustrations can apply in the accounting world when accounting firms rotate their analysts and associates and put different people on your file every quarter. You're having to get them up to speed again, and this ends up burning a lot of time and cost. So that concludes the 4 questions that should be asked before you begin any accounting engagement. But I want to end this video with one more tip. When was the last time you pulled your balance sheet? Have you looked at the most recent report? Do you understand the numbers behind it? It is a critical document that lists all the assets in your company, outstanding debt, and your equity position. But most business owners I know really only focus on their profit and loss statement and their profit margins. It is this precise document that I often find some critical errors. To take it a step further, a lot of clients that I speak to didn't even realize that they had errors in their balance sheet until it was pointed out to them by a third party, like investors during a capital raise process. And something like that can be extremely embarrassing. Listen, I know, weighing financial options could be such a daunting task for a business owner. But you may recall that I did mention a third option at the beginning of this video, and that's CFO Services. When I looked around the marketplace, I discovered a gap between large accounting firms and bookkeepers. And this is what inspired me to launch Vistance Capital, was to provide the CFO services required for business owners to help them become more successful. At Vistance, we do the heavy lifting so that you don't have to. We will assess your business and come up with a customized scope that is optimal for you. So come to www.vistancecapital.com to learn more about us, and even sign up for a free consultation. We'd love to meet, chat, and see how we can help your business grow.